Market players continue to feel unmet demand from the midweek T-bills auction as investors' interest moves to the newly issued 7th of March 2024 one-year bill. Meanwhile, traders at Access Bank expect liquidity in the money market to dry up due to the T-bills auction debit. Ladi Belo, a fixed income trader at Access Bank, joins me now for more on the market update. Thank you so much for your time today. All right, I understand that Ladi's still on the show there. But Ladi, a quick one. Let's get into the market, your major trends you've seen in the market this week.
Hi, good afternoon. Thank you for having me. So we've seen the week pretty much with attention skewed towards the NTB auction, where rates went up marginally by 10 basis points on the one-year maturity. That's the 7th of March 2024. But activity has hovered around the medium-tenured maturities prior to then. But by and large, we saw most of the action in the secondary market remain on the sidelines until the NTB results was printed, which would further dictate the pace of the market in the short term. So what we saw was most of the bids were skewed towards the one-year maturity, which was evident in the subscription, and also with regard to the clamor for higher rates in the primary market. We saw the range of bids on the one-year maturity inch up from 5.74 all the way to about 10%, which is where the DMO was able to clear this auction, where it closed at 10% levels. In the secondary market, on the bond side, we saw some buying activity in the beginning of the week, which intensified as the week progressed. But emphasis was skewed towards the on-the-run bonds. That's the 2028, the 2037, and the 2049 maturities, which would also be reopened at this month's auction. So it's been fairly active, more active than we've seen in recent times, and we've seen a drop in yields across board on the bond side. And on the Treasury bill side, from the 10% at the NTB auction, we've seen a bit of divergence in rates, where it traded as low as 6% on Wednesday evening, as well as Thursday, as counterparties try to deploy their idle funds before the end of the week.
Yeah, because when you look at the liquidity there, I'm trying to understand in terms of your outlook, what the major things that could impact it. I understand that you have those possible CRR maintenance coming up and as well, and then the NTB auction debit as well playing out. By how much do you think it will significantly impact liquidity?
So we had the NTB auction on the one-year maturity is about 312 billion. That will be mopped up there, about 1 billion on the 91 days and 10 billion on the 182-day maturity. So that's a total of about 333 billion across board. This morning, we opened with market liquidity of around 200 billion. So given we're not having any retail SMIS auction today. What we're having is the release of the previous results. So we expect this level of market liquidity to linger into the system opening next Monday as well. But going into next week, we expect to see another NTB auction where market liquidity will further be tightened. And towards the end of the week, we expect to see usual bi-weekly retail SMIS conducted as well, which would further reduce the level of liquidity in the system.
Yeah, very quickly, I'd like to take you back to the T-bills auction, and in terms of the results, how does it compare to previous results and the yield curve activity in the secondary market? What other trends did you notice there?
So what we've seen in previous weeks is a bit of a disparity between rates, like I mentioned, between the primary and the secondary markets. So the rates before the auction in the secondary market lingered around the 5% mark on the previous one-year maturity. And in the primary market this time around, from 9.9% 2 weeks ago, the auction cleared 10 basis points higher than previous level. We had a bit of different opinions about where the yields ought to be, but there's definitely a clamor for double digits interest rates within the one-year space. And I think DMOs has heard the cries of the local market and are adapting to what they feel will be an acceptable return for local investors within this space.
All right, we'll keep our eyes on the market to see how it plays out for next week. But thank you so much for that breakdown there. Ladi Belo there, a fixed income trader at Access Bank.